Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
Now, how does that happen? The Dow closed on Tuesday at 51,999. Like just under 52,000. You gotta love it. All right, welcome everyone to the Wednesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer at Town Bank Mortgage right here in Wilmington, North Carolina. We break down the top stories impacting mortgage rates every single weekday, unless, of course, I'm sick, on vacation, or it is Azalea Festival week, and it's neither of those. So we got a lot to get to. We had oil prices falling, bond yields falling, equities soaring, SpaceX. What is SpaceX is up, like 60%? I think that's what I saw. I loved that on Monday that SpaceX jumped so much that Elon Musk made more money in one day than Warren Buffett, the Oracle of Omaha, his entire career. Elon did it in one day. You almost feel like it does feel very bubbly, doesn't it? When you're hearing these crazy stories and Dow's at 52,000 and just a lot of optimism out there, mostly because I think everyone has now realized that at least the Iran war in the way that it was will no longer be that way. That Trump wants a deal. Iran kind of realizes that. And I think Trump wants a deal before the 4th of July. I think I don't know what's going on in his head, but he clearly is like, I want this over. I want this over. And so I think something really crazy is going to have to happen for this to not end. And so because of that, everyone's assuming that the strait's going to reopen, which is the number one inflation pressure that we're dealing with in our economy, the global economy. And so without that, things look a lot better. And apparently it's going to happen right away. The Wall Street Journal reported Tuesday afternoon that the U.S. supposedly is going to allow Iran to immediately begin selling oil and fuel under the deal to end the war, according to people familiar with the agreement. The provision for waivers of sanction on oil sales takes effect immediately upon signing the agreement this week and also covers necessary services, including banking, transportation, and insurance needed to facilitate the sales. The United Against Nuclear Iran, a nonprofit, said an Iranian supertanker carrying crude oil had left the port of Chabarhar, I think I'm saying that right, crossed the U.S. blockade. And from now on, we'll just assume when I'm mispronouncing a word that I know I'm not saying it right. Crossed the U.S. blockade and was sailing out of the Gulf of Oman Tuesday with its location tracker active, marking the first such instance since the start of the U.S. blockade in April. And so everything else, there seems to be a lot of confusion onto exactly what Iran's going to get. When are they going to get it? Who's going to be paying for it? What's going to be frozen or what's going to be unfrozen? What's going to stay frozen? All of that is still up in the air. We still have not seen a memorandum of understanding. It was reported that Israel even asked for a memorandum of understanding and didn't get it. So there's still a lot that we don't know, but they're clearly making it crystal clear that the Strait of Hormuz is about to start opening. Trump is arguing it's already open. And now that's another thing we don't know. Is there going to be a toll or not? I heard something about Iran wasn't going to do a toll, but they were going to do like a fee. It's like when you go to college and they're like, oh, we didn't raise tuition this year, but they raised the student fees. It's like, it's the same thing. So I don't know exactly what they're going to try and argue there. But oil markets took it with much happiness. Brent crude fell below $80 for the first time since the beginning of the war. And like I said, was kind of hanging right under $80. So that's going to be much relief to a lot of economies around the world. And like I said, the markets are pretty much saying, okay, this is over. Something could always change. Obviously, there's a lot of people who were supportive of Trump and starting this war with Iran. And a lot of them are being very critical of the deal, even though we don't really know. We're all just sort of going off what everyone's saying. But the problem is both sides are saying different things. And so everyone's assuming the deal is going to be a little bit more favorable maybe to Iran. And so there is a lot of criticism from people who were supporting Trump. And so I don't know if that criticism could push Trump to say, you know what, maybe we're not going to do it. But he seems pretty steadfast on wanting this deal to go through. And so I don't see something happening that would end this agreement. Now, 60 days from now, Trump even said something along the lines of it might take more than 60 days. Different story, but at least in the near future, a lot of people are saying the strait's going to open back up. Iran's going to start selling its oil again, help its economy out. That seems certain. And so markets are acting accordingly. We ended the day, let's see, the 10-year was down about 3 basis points. I think at one point it was down 6. So not bad. We're now at the lowest level, 4.43%, lowest level in about a month. If I'm doing the math right here. No, I'm sorry. Yeah, in about a month. About last mid-May is the last time we saw rates at this level. Very similar with the 30-year fixed, was down 2 basis points, 6.54% according to Mortgage News Daily. That was also lowest level since mid-May. So seeing relief, bond market, oil markets, and then the Dow crossing 52,000 for the first time, but couldn't hold it through the close. 51,009. I swear someone did that. Someone did that on purpose somehow to keep that from happening. Adding to the sort of beneficial environment, the good environment, was the Treasury held a 20-year bond auction. Perfect timing. Actually, the 10-year bond would have been a little better for perfect timing. And it was a strong auction by all accounts. I mean, pretty much every single category. So first off, we'll break down a Treasury auction. So we have what's called a when issued price, and that is the yield. Where is the current market rate for a 20-year bond? It was at 4.937%. The Treasury auction saw a high yield of 4.927%, which means people at the bond auction were actually getting a lower rate than what was available when the auction began on market, which is a sign of strong demand. Now, when it's reversed, when you see the bond auction taking a higher yield than when the auction starts, that's called a tail. When it's negative, it's a negative tail, also known as a stop through. That's it, stop through. And so negative tail, good. Positive tail, bad. And so that was the first time it was a strong auction. Then we had the bid to cover ratio, which explained is how much demand you're getting for how many bonds are available. So a higher ratio, a once again stronger auction. The bond to cover ratio was 2.75, up from 2.55 at the last auction, and the best bid to cover ratio since March. So 2 categories, strong auction. And then another sign was foreign demand in direct investment. Foreign demand jumped to 71.6%. That was up from 67.7% last auction and was the best foreign demand number since July 2024. Foreign demand is very important for Treasury auctions because we are issuing so much debt that if foreign buyers aren't buying it, that's going to require domestic buyers, whether it's, hedge funds and individual investors and other investment groups, or primary dealers. that causes what they call a crowded out effect, which is basically every dollar that is going to buy, U.S. debt is not a dollar that is going to the private sector. And as we all know, the private sector spends money much more efficiently than the government. And so if you have too much money going to the government versus the private sector, you can get weaker growth. And so to counter that, or so that doesn't happen, you have foreign investment. So you had stronger foreign investment, higher bid to cover ratio, and a negative tail, all signs of a strong bond auction. So that just added to the sort of path that we've been on. So by all accounts, I think it was an A- auction. So pretty close to perfect is what you want to see for a bond auction. So some great news there. Strong bond auction, always a good thing for the bond market and therefore mortgage rates. We also, now this was not good, the bad news that we got. However, it could be good news for rates in the long run. Construction data. So as you know, on Monday, we got home builder confidence that was not good. Home builder confidence, second lowest level in 9 months. It's not good. And then we got actual data looking at building permits, housing starts, housing completions, and not good. It was not good at all in any way, shape, or form. Housing starts fell to a seasonally adjusted annual rate of 1.177 million. That was a 15.4% drop from April. That is a big time 1 month drop, and was the weakest pace of home construction since May 2020. That's not good. 5-year low compared to 2020 numbers. Not as bad as March 2020, but bad nonetheless. Economists were only expecting, we're actually expecting an increase. So, complete reversal, not good. Building permits, a leading indicator of future construction activity, slipped to an annual rate of 1.413 million. That was down just 0.7% from April, and was slightly below economists' expectations. They were expecting a slight increase to 1.42 million. So, not as bad as housing starts, but not great. And then completions, continuing the weakness. Housing completions also fell to a seasonally adjusted annual rate of 1.313 million. That represented an 8.1% decline and the lowest completion rate since January 2022. So, like I said, pretty bad residential construction report. I mean, there's no, the silver lining, I guess, is permits, which are the furthest indicator of everything. So, housing starts, could be a delay potentially. So, you get the permit, then you move forward. And housing completions is obviously, when the housing started 2 years ago, whenever this project began. So, okay, maybe permits weren't that bad, but man, housing starts and completions just, not good. Considering the fact that we're still, by all accounts, 1 to 4 million homes underbuilt, to see construction slow at this level, it tells me that we're not going to see home prices slip. And there's nothing that's adding inventory to the market, and we're not seeing high foreclosures. So, all these people who keep talking about, home prices are going to fall. Yeah, maybe a little correction. But without construction and without any other way for homes to make it to market, there's not some huge amount of inventory. Sure, inventory levels are normalizing, but we're not seeing like a crazy amount. We're not seeing like massive foreclosures like 2008. Where's that inventory going to come from? Where's that imbalance of supply and demand going to come from? And so that's why you could see, if one of the ways the Fed could say, oh man, look how bad residential construction is, we got to get these numbers up, you lower rates. And the one thing that was going to prevent the Fed from doing that was this energy shock that now seems like it could be over. And so we could see I think the last CME Fed Watch tool had the chance of a rate hike at 60% by the end of the year. I wonder if we're going to see that flip with these energy concerns no longer, and then concerns about the home builder market, construction. Do we see hey, we got to jumpstart demand And then builders, builders need to borrow money. Lower rates that helps them. So, not on its own, but you need other parts of the economy that could help them sort of make that decision. But we still have to see energy prices fall, and that needs to be reflected in the inflation reports, which of course is going to take a little while for that data to come to fruition. All right. Today, we get our first Fed meeting since Kevin Warsh took over as Fed chair. Should be interesting. They're not going to do anything to rates. So the big question is, what is Warsh going to say? And we did see late Tuesday, Wall Street traders, economists, everyone was basically arguing that we're probably not going to get, because we're supposed to be getting at this meeting, the quarterly forecast from Strategic Economic Projections, SEP, also known as the dot plot. And they're pretty much convinced that Kevin Warsh is not going to participate. Now, you could say, it's because he hasn't been there long enough to give his projections, but he follows the economy. Most are saying he just doesn't want to do it. This is one of his big arguments that he made during confirmation, which was the Fed talks too much. And that was big topic of conversation. A lot of articles written on Tuesday and Wednesday about how, Warsh is going to do this press conference, but is he going to do one after every meeting like Powell did? Or is he only going to do it quarterly? Or some combination? And so that's what the big meeting is going to be. It's going to be, what is Warsh going to say about these economic projections? Could he put an end to them? That started back after 2008 as a way to kind of calm the markets and let them know, hey, we're going to keep rates low. So feel safe to borrow. That was the original idea behind them. Or is he going to get rid of them? What is the communications from the Fed going to be moving forward? That's really going to be the big question. So we will see. But that's it. We're done. We are done. You guys enjoy your Wednesday. We'll be back here Thursday for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.